Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today's another episode of the Mortgage Guy Podcast. Today, we're going to talk about a little bit about refinancing and where the market's at. And we're also going to talk about some news from Fannie and Freddie and what might be happening out there and a couple of studies on what's going on with foreclosure rates. Anyways, let's just dive into the meat of this. We like to make this stuff brief because we can't keep your attention for more than 30 seconds. So let's do this. Refinancing. So last 10 days or so, we've seen a pretty significant drop in the rates, specifically hovering around government lending. And of course, Fannie and Freddie follow. Government lending is still a little bit stronger. Again, I don't like to quote rates, but government lending starts with a 5, maybe, if you're really good. I don't know. Something like that. And a little bit higher on Fannie and Freddie without doing any buy downs. So it might be a good opportunity if you were sitting in the 7s, closed in the last 18 months, 2 years, because we've been in this high rate environment for 2.5 years, pretty much. It's been a minute. So we kind of got used to it, didn't we? That's sad. But if you're sitting in there in the 7s, it might make sense for you to look at that refinance as a good opportunity to cash out, because if you have a bunch of equity, if you closed in 2020, 2021, that's always an option. But rate term wise, if you're closed in 23 and later, most likely upper 6s, mid 7s, low 7s, something like that. It could make total sense. We're closing one on Wednesday, and we're closing one in a couple of days, and saved them almost $500 a month. It was like $492 or something like that. Fantastic, massive drop. I can't call everybody. I wish I could. One man. So if you missed a call from me, or if you're watching this video and it seems like it makes sense and you're worried that I didn't call you, give us a holler, right? Information's at the bottom of your screen. But again, good opportunity to save some money. Might put you in a better position affordability-wise. Take some of that savings. You can apply it to the mortgage if you wanted to, right? Pay it off early because you're used to paying a little bit higher payment. Or you can, apply it to high-interest credit card debt or whatever you want to do. It's all good. So I wanted to throw that out there and go ahead and rip that Band-Aid real quick because we have seen some movement. Now, something before I move on to the next topic. We've seen movement because, like I've talked about before, our industry is very speculative, right? It's just, think stock market speculative, right? So there's news or high probability of a rate cut this month with the Fed. It's probably going to happen, probably a quarter point. So we react to it. We react to that probability, all right? So you'll see mortgage-backed securities, strengthen. Now, the fear is if they don't cut, not if they raise them, which they're not going to do that. If they don't cut it and they keep it the same, you're probably going to see a rate increase from where I'm at today. Okay? We all advertise these low rates, all this stuff. If they don't cut it, it's probably going to pop back up because, like I've said, we're speculative. Within 2 or 3 weeks before anything changes, really, we react to the news. Okay? So what you're seeing today is assuming a rate cut. That's what we're assuming. So if it doesn't change, ladies and gentlemen, rates are going to move upwards probably. All right? Not a lot, just a little bit. Anywho, let's talk about Fannie and Freddie real fast. So Commerce Secretary Howard Lutnick suggested that the U.S. government may push forward with an IPO of mortgage giants Fannie and Freddie in 2025 still. We're in September. He's got 3 months to get that done, which that'd be crazy, right? Fantastic. He said the goal is to show taxpayers the true market value of the GSEs while keeping mortgage costs low under the Trump administration. Could be well this year still. And then there's some comments and some quotes here. I think it was from the president. I think a deal is going to be struck. I think we're going to take this company public. I think we're going to sell it. Could potentially be the largest IPO in history. But only a small percentage of these companies, and will show the American taxpayers these are assets that they didn't know they owned. But we own them. The taxpayers own them. That is the quote. That would be huge because the thing is, if they go private again, it might actually assist in lowering some costs with a little bit of deregulation, not a lot. A lot of the same rules are going to be put in place, but there's a lot of craziness involved when you deliver loans to Fannie and Freddie. A lot of years later audits and buybacks for no reason. There's just a lot of weird stuff. Hopefully, maybe some of that will be alleviated a little bit. But with private monies, it's very possible that each conventional loan might be worth more, meaning our yield spread premium when sent to a servicer may go up. If that goes up, that means your rates are going to go down. we'll be able to decrease costs and expenses, right? So that could be helpful. That could. Again, I don't have a crystal ball, but in a nutshell, it's just like basic economics. You save costs, it's going to help the consumer, 100%. Let's hit foreclosures real fast, and then we'll let you all to the next 30-second video because I know you're bored. Foreclosures activity rises for the 6th straight month. You know what? I don't even want to get into the details of this. Guys, if you are running into trouble and you've run into some sort of economic issue, don't keep it to yourself, okay? Call your agent to help you buy that house. Put a sign in the yard. Try to sell it. Now, granted, I'm sure there's situations where that may not be a feasible option. I'm not saying that everybody's going to be able to do that, but use that first. You get behind if you truly recognize I can't do this. This is not going to work. Get the sign in the yard and sell the damn thing. All right? This foreclosure mess should not be happening. Now, I wish rates were lower and affordability was better, but you decide to make that move to buy the house, right? If you run into trouble, try to sell it. Who knows? You might be able to make a few bucks on it, depending on the situation, right? If you get foreclosed, you're going to get zilch. Hell, you could have a judgment or lien against you after the fact, depending on what it sells for, and it's going to damage your credit for a very, very long time. It's going to hurt your ability to purchase a house in the future if you wanted to, at least 3 years typically, okay? So don't. Just open your mouth, talk to your agent, tell them the situation, try to unload it, okay? There's a ton of people out there that want to buy homes, and there's not enough inventory on the market, so give people that opportunity and save yourself at the same time. Hell, I actually got a short sale going right now. Haven't seen one of those, and I don't even know how long. It's been years. So it does happen. So make sure you pull the trigger and take advantage of those situations, or you look into a modification with your loan servicer, something to get you back on your feet. Don't be quiet about it. All right. That's all I got for you guys this week. I have a lot more to talk about, but I'll hold it. It gets into a little bit of a political arena, so we're going to pass on that. Remember, subscribe on YouTube, guys. Check us out on Apple Podcasts and Spotify. Catch you all next week.